Recession Explained. What to do. Meet the Jones family. They're a family of 4 who've been waiting for an opportunity to invest. They've saved enough over time, and now they need to consider what to do. Now, there are 4 options they have to consider. Your day-to-day expenses would be one of your first things you should consider. This can be as easy as going to the grocery store or even getting gas. These are your day-to-day that you need to survive. The next thing you should have money for is emergencies. This can look like a medical bill, and medical bills can range, especially if you don't have insurance, so it's always good to have extra money. In addition, it could be even a car expense. Cars break down all the time, and having money to repair your car is important. Like I said before, these are all very important, just like a large purchase. Large purchase could be something like a house. And so you would want to have enough money to put a down payment, or even going to college. Or if you're saving for your child's college fund, you would want to have cash. And I would even say a car is very important because you may need transportation to work. These are all things you should be considering before investing your money. And finally, financial opportunities. Now, of course, one of the most common is to take advantage of the stock. So that would be your 4th. Let's talk emergency fund. Emergency funds are very important because during a recession, you may lose your job, or you may have a significant other who does. Now, you should have roughly around 3 to 6 months of expenses, which will take care of several aspects of your life: housing, health insurance, food, utilities, and debt. Now, these are the things that you need, so think about the things you can live without, such as dining out, vacation, a second vacation home, non-essential shopping like a new computer, a new watch, those things that you don't need today that you can wait for the future. Where should you be placing this? Well, this is very important because we don't want to lose this money because it is your emergency fund. So the first thing it has to be is low risk. And also, it has to be very accessible. So when you do need it, it needs to be easy to take out and easy to put back in when you don't. And the last thing we want to make sure is we want to take this money and still make some money on it. So find something where it pays you a little bit more. Now, this is a health check for your finances. This is one of the last steps you have to do to check if you can invest your money. The thing we want to tackle during this piece is to tackle the high interest rates. And they can come in several different forms, but some easy ones and some good examples are your personal loan. Personal loans can be upwards of 9% on average, and this can definitely be something that you might have needed for an expense. Next thing is credit cards. Credit cards are notorious for having very high interest rates. I have a Chase card that is around 19% APY, and that's something I like to always pay down. And lastly, private student loans are notorious also for having high interest rates. Why don't we all do this in practice using the Jones family? In this example, we're going to make several assumptions. The first one will be that they have credit card debt of $5,000, and then we're going to assume they have $5,000 in cash. This is excess of their daily expenses, their emergency fund, their large purchases, and other financial opportunities. In addition, we will assume that the stock market can go either up or down, which would be negative 10% or positive 10%. And after this, we're going to do some calculations really quickly. So if we don't pay off the credit card, it's going to be negative $1,000 at the end of the year, and it's going to be positive $500 if the stock market goes up, and negative $500 if it goes down. Now, we have a higher chance of paying off our credit card debt and saving $1,000, so we should be making that type of decision. It is, at the end of the day, your decision. So make sure you consider all opportunities that you have, as well as make sure that you're safe with your finances by having an emergency fund, making sure you have extra cash just in case those unlikely situations happen to you. I hope you enjoyed this video, and if you did, like and share and subscribe. Thank you and have a great day.